Welcome to Mistine Deep Dive. Today we're breaking down UNH, which stands for UnitedHealth Group. It's one of the biggest health-related companies in the world, and even though it's not flashy like tech stocks, this company has a powerful income engine behind it. Whether you're looking for stability, long-term growth, or steady dividend income, this one's worth understanding. What is UNH and what does it do? UnitedHealth Group is a massive healthcare company based in the United States. It has two main parts: United Healthcare. This part sells health insurance to people, employers, and the government. If you've ever had a healthcare plan through work, there's a good chance it was with them. Optum. This side runs clinics, manages pharmacies, analyzes health data, and helps doctors and hospitals make better decisions. They call this the services side of healthcare. So in simple terms, one part sells insurance, the other part runs the systems and services that make that care happen. How does UNH make money? They make money in two big ways. First, they collect monthly premiums from people who pay for health insurance. Second, they get paid for offering healthcare services through Optum, like pharmacy benefits, running clinics, and doing medical paperwork for hospitals. This gives them multiple streams of income from both sides of the healthcare system, the people paying for care and the systems delivering care. How much could you make from UNH? UNH is not a high-yield ETF or a fast-moving growth stock. But it pays you a quarterly dividend, meaning every 3 months you get a small payment just for holding the stock. Let's make it easy. If you had shares of UNH, you'd likely be getting a steady payout around 2 or 3% per year. It's not life-changing in the short term, but it's stable and grows over time. This is the kind of investment that builds wealth slowly and securely, not fast and flashy. Recent payment tracker. Here's a simplified version of UNH's past few dividend payouts. It has paid every 3 months without missing a beat. The amount has gone up slowly each year. It's the kind of pattern you want if you're looking for reliable income, not a risky up and down ride. UNH versus riskier stocks like tech or Bitcoin. Here's how it compares: investment monthly income safety upside potential. Risky stock like crypto or meme stocks. High but wild low high, UNH low but steady high medium. If you want your money to grow slowly with peace of mind, UNH is a great example. If you're chasing fast cash, this probably isn't it. How stable is it? UNH has been around for decades. It's in the healthcare business, which is something everyone needs no matter what the economy looks like. That makes it more defensive than most stocks. It won't skyrocket during a tech rally, but it likely won't crash when things get bad either. It's the kind of stock you keep in your portfolio for the long haul. Sustainability warning: is the dividend safe? In plain English, yes. UNH's income doesn't come from risky bets. It comes from real businesses like insurance and clinics. As long as people get sick, take medicine, and use insurance, this company keeps earning. That said, there are a few things to watch. If the government changes healthcare laws, it could impact earnings. If healthcare costs rise too fast, their expenses go up. But overall, their dividend is solid and growing. Taxes: UNH dividends are taxable income unless you're holding it in a retirement account like a Roth IRA. That means you'll probably owe a small amount on the money you receive each quarter. If you sell the stock later at a gain, you may owe capital gains tax too. It's not complicated, but it's good to be aware. When should you sell UNH? You probably don't need to. This stock is often used as a forever hold, meaning you buy it, collect income, and just let it grow over the years. The only time to consider selling might be if healthcare laws change drastically, if the company faces massive lawsuits or loses key contracts, or if you simply want to rebalance your portfolio for more growth. Mistine meter rating. Let's score UNH on the Mistine meter. Income: 6 out of 10. Risk: 3 out of 10. Long-term safety: 9 out of 10. Simplicity: 8 out of 10. Overall, 7.5 out of 10. It's not the most exciting stock, but it's a strong foundation and a smart portfolio. Is UNH right for you? If you want income with low drama, this stock is for you. If you're looking to make a lot of money fast, it probably won't get you there. But if you like the idea of owning part of the healthcare system, something people will always need, then UNH is worth a look. Final words: UNH is like the reliable older brother of the stock market. Not flashy, not wild, but it gets the job done. It pays you to hold it. It grows over time. And it does it all in an industry that's not going away anytime soon. That's the kind of stock a long-term investor can appreciate. If this deep dive helped you understand UNH, hit like and subscribe. Got another stock or ETF you want me to break down in simple terms? Drop it in the comments and I've got you covered. This is Mistine Deep Dive, where we make smart investing simple.